Back stocks, gold, and Bitcoin all looking to extend their record closes today. So where is the best place to be positioned if the market is in fact going to have an end-of-year melt-up? Let's ask Sherry Paul. She's private wealth advisor and senior portfolio managing director at Morgan Stanley. Welcome back.
Thank you.
So how do you feel about this market at a time where I think it's almost daily we're having a conversation about AI bubbles or not? And you're having some of the most successful investors in the world weigh in on that topic. Yeah. What do you think?
Well, look, I mean, we've had 30 new all-time highs,
plus.
This year alone, plus.
More.
Yeah, I think actually now we're at 31 maybe today. And, where do we start about all the good things that are coming, in terms of the investing climate? We've got $5 trillion sitting in cash. We've got pretty low unemployment. We've got earnings revisions, moving upward. We've got a tax bill kicking in January for corporate tax cuts. And deregulation, M&A activity kind of heating up. And so, you put all of that in the context of AI innovation and as an accelerant to all things, then there's still room to move here. And just because markets are going higher doesn't mean they're not going to continue to do so.
Wow. I mean, you sound like you're talking about like a super melt up. I mean, Paul Tudor Jones was basically saying that, too. He just said it's going to end badly.
Well, look, I mean, I think that there's some people talking that way, but I mean, I've been watching the playoff games, and you don't know how many runs you're going to hit in the last inning. I mean, it could be, a monster last two innings here. So I think it's hard to say that, and it's hard for people to hear that because they're waiting for the shoe to drop. But we just don't have those conditions for the shoe to drop.
No, not yet. I mean, but so if we agree with you as an investor class, we say, you know what, I totally agree. I mean, it may end up badly at some point, but not for the next however long. So I'm going to play the cards I have in my hand. What does that mean for where I want to be?
Well, for individual investors, and remember, like, I work with people that live in their money, and so they're always wanting to know, like, what do I do now? And so for investors that have really benefited from this market over the last few years, we're taking money off the table and we're funding life goals like college plans and wedding accounts and taking tax deductions and donor advised funds and taking gains in a way that can materially benefit that overall life money plan. And for new clients that we're onboarding that have missed the market for whatever reason, because indecision is a killer of returns, and so is inflation. We're building portfolios that are well allocated across what I call the idea maturity time horizon, because we're also not only are we at all-time highs, but we have all-time correlations happening in the market. And so this principle, the mathematics of diversification, are also stretched. And I think that's where your bubble folks get a little bit hung up, is on PEs and correlation, and they're missing the moment on, like, wow, we have an idea here that is going to accelerate and consolidate very rapidly over the next few years. You don't want investors to miss that.
No, but you have to be cognizant of what you think is already in the prices of some of these stocks, and they've already gone up so much. The numbers are so large, both in returns and in investment from these companies. It needs to pay off.
Well, you heard that 2 years ago in 2022 when people were looking at the PE ratios of a lot of what now we're calling the AI innovator stocks and going, wow, these are stratospheric type PEs. And what happened was the earnings came through and we saw the PEs go down. And so for even you don't want to get too myopically focused on PE ratios in these radical moments of innovation, because the trend could be a J curve at the end, this explosive sort of setup. And that doesn't mean that everything you should have should be in AI, or that you've got to get every last penny off the table in terms of your returns, which is why I also suggest that, that right now in a fast market, like, your best friend is rebalancing. I mean, you should have a strategy that has bandwidths, that has an allocation, that you're taking money off the table, reladdering it into a portfolio in a way that you're not too over your skis in any one moment.
You like what's largely worked, tech, industrials, and financials. We spent many months talking about record highs in all of those areas. So you want to stay large in market cap?
Yeah, large balance sheets. Balance sheets give you dynamitism. And that is, I think, and liquidity. It's one of the most crucial ingredients to be able to capitalize on radicalized moments of change, which is what we're in right now. And that's why I like the big caps.
All right, we'll leave it there. Sherry, thanks.